Florida homeowners lost ground last year. Yet on a single strip of sand in Naples, one sale alone hit $225 million. Here is the shape of the story. From January 2025 to January 2026, the typical Florida homeowner saw equity slip. Depending on which slice of the market you look at, the median loss sits between roughly $10,000 and $17,000. One statewide tally puts it near $10,157 over that 12-month stretch. A separate lens on major metros pegs it closer to $17,384. The point isn't to debate the decimal, it's to mark the turn. The biggest percentage drop flagged across the state, Punta Gorda. Values there fell 7.97% year over year, a median decline of $26,624. That local pain showed up in profits too. In the third quarter of 2025, the typical home sale profit margin in Punta Gorda slid from 88.3% to 58%. That was the second biggest contraction in the country at that moment. Zoom out, and the correction widens. 8 of the nation's 10 largest percentage declines in home values over the past year landed in Florida. Cape Coral and Northport led the pack. Cape Coral registered a 10.207% slide, the steepest drop in the country, while Northport was close behind at 88.4%. In both, the average owner gave up more than $38,000 in equity in a single year. Jacksonville saw the smallest equity erosion on that metro list, at $11,241. The correction reached beyond those hot zones into Tampa, Miami, Orlando, Deltona, Lakeland, and Palm Bay, all ranking among the nation's top 10 for percentage price declines. And yet, Florida defies a single story. On the Atlantic side, in Palm Beach, the average home value now hovers around $9.8 million. That's up 1.5% over the past year, and a stunning 118.2% across 5 years. In that enclave, the cycle is not just speculation, it's permanence. Buyers replanting their lives, their family offices, their schools, driven by scarcity and the rising cost to remake what already exists. Trophy waterfront estates and prime in-town properties have surged the most. Other segments have grown more moderately. It's the same zip code, but very different currents. If you scan the map for pockets of resilience beyond the marquee, smaller towns put up quiet gains. Arcadia eked out a 3-figure median rise of $511 year over year. Palatka added $635. Clewiston gained $1,335. Lake City topped that small cluster with a $2,427 lift. Meanwhile, in Florida's interior, other small communities posted growth over both short and long arcs. Wauchula's home values rose 3.1% over the past year and 64.8% across 5 years. Old Town logged 3.2% and 48%. South Bay posted 1.2% and 61.5%. Bell, at an average value of $290,620, ticked up 1.2% over 12 months and 1.5% over 5 years. So what happened to tilt the state this way? Signals point to 2 forces with teeth. First, the great unwind. After the post-pandemic frenzy, price correction is doing what corrections do, erasing overshoots. Second, demand that can't or won't match sticker prices has been backing away. High prices have been fencing out buyers, stretching listing timelines, and forcing price cuts. Add in a layer of carrying costs that are quietly rising where it stings. In condo towers and townhome communities, median monthly homeowners association fees climbed from $125 in 22.4 dollars, $135 in 22.5. That 8% year-over-year jump squeezes owners and dulls condo demand at the margins, especially when you're budgeting to the last dollar. Another tell is time. Across parts of central and coastal Florida, 40% of active listings are now sitting more than 90 days. In the Deltona-Daytona Beach-Ormond Beach area, one recent week tallied 210 listings aging past that 90-day mark, with an average of 244 days on the market. Sellers are losing leverage, canceling, and relisting at new numbers. In the Sebastian Vero Beach-West Vero corridor, you can see the split on a single drive. An exclusive enclave like St. John's Island Club, with a median price tag around $4.65 million, exists alongside a metro, where the broader median list price is $357,379. But price discovery cuts both ways. Agents on the ground describe a market that is not dead, just different. Strategically priced homes still draw strong activity, and buyers who waited now have room to be selective. In one coastal pocket, pending and sold transactions in January were more than double the count from the same month a year earlier. That jump doesn't rewrite the year, but it does hint at what happens when aspirational asks get pulled back to earth. The story tilts even more when you pan down to the waterline in southwest Florida. Naples had a record in 2,205 that held for what felt like a heartbeat. David and Jerry Hoffman, who relocated from Illinois, found a brand new estate on Admiralty Parade West in Port Royal and wrote a check for $85 million. The home spans more than 17,000 square feet, sits on nearly 2.25 lots, and commands 250 feet of frontage on Naples Bay. 6 bedrooms, 10.5 bathrooms, wide water views as far as the eye can track. The seller had slept there one night. The Hoffmans closed fast. Then they bought the adjacent home too, a so-called guest house used during construction, for another $20 million. That second property adds roughly 6,600 square feet with 4 bedrooms and 6 baths. Total investment, $105 million. And still, the new record was not safe. In that same month, 3 adjacent waterfront properties on Gordon Drive in Port Royal, addresses 2,170, 2,200, and 2,340, sold as a package for $225 million. Combined, they span more than 15 acres and deliver about 800 feet of Gulf frontage. The middle parcel at 2,200 Gordon Drive alone stretches over 8.5 acres, anchored by a home of more than 8,800 square feet, with 11 bedrooms and 16 bathrooms. The second residence at 2,340 Gordon Drive dates to 1,938 and is roughly 6,000 square feet, with 5 bedrooms and 4 baths. The third, known as Megan Park, at 2,170 Gordon Drive, threw in gazebos, a bird aviary, courts, ponds, and open land. The new owners are expected to clear the properties to make way for a legacy compound. That $225 million figure marked the largest home sale in Florida and one of the largest in the United States. Those are outliers, but they carry signals. Southwest Florida's ultra-luxury market remains a study in contrast. Showy sales, yes, but also inventory piling up. A recent look across Lee and Collier counties found more than 60 active listings priced at $15 million or more. At the current sales pace, that translates to roughly 22 months of supply, meaning it would take nearly 2 years to sell through that stock if no new listings were added. Months of supply is a simple yardstick. How long today's inventory would last at today's rate of sales? In this segment, it's high. Some of those estates have been perched on the multiple listing service for more than 1,000 days. Even so, deep demand is not gone. In mid-January of 2206, a waterfront estate at 4,296 Cutlass Lane in Port Royal sold for $55 million. Built in 2017, it spans more than 15,000 square feet on 1.59 acres. Listed in late October at $60 million, it went pending by mid-December and closed in less than 60 days. Location did its work. Pace, too. Underneath those marquee deals, the mechanics of pricing are shifting. In Collier County's top 10 sales of 2025, most sold below their list price. One brand new estate at 3,035 Fort Charles Drive, listed at $49,500,000 and closed at $43,100,000 after just 46 days on market. Another at 3,880 Run Row, listed at $35,995,000 and closed at $34 million after 69 days. At 3,200 Gin Lane, a $29,450,000 asking price yielded a $26,400,000 sale after 205 days. Yet not every listing bent. An address at 3,373 Rum Row closed at exactly $35 million after 0 days on market, a lightning-fast matched buy. Down the coast in Lee County, the most expensive sale in 2025 set a county record at $14.3 million for a home at 26,532 Hickory Boulevard in Bonita Beach. More than 5,300 square feet under air, with 6 bedrooms and 8 baths. 6 of Lee County's top 10 sales last year clustered along that same beachfront stretch of Hickory Boulevard, and nearly all carried price trims between list and close. One home at 28,970 Il Coure Court, listed at $17,995,000 and sold for $13,250,000 after 135 days. Another at 26,756 Hickory Boulevard came to market at $11,895,000 and closed at $10,600,000 in 131 days. A riverfront property at 15,300 Allen Way in Fort Myers, listed at $6,850,000 and landed at $6,500,000 in 82 days. Back in Central Florida, the fever broke without the spectacle. By December of 2025, the median home price across the Orlando region settled just above $380,000, essentially flat year over year after climbing through 2024. That cooling gave buyers a little breathing room. It also set the stage for a policy variable that could matter at the margin this year: possible property tax relief. Lawmakers are considering several proposals. If any pass, they land on the statewide ballot in November. For someone trying to buy, even a modest reduction in property taxes can flow back into the monthly budget, money that could help reach a better location, cover renovations, or shorten the life of a mortgage by nudging more toward principal. For sellers, if buyers can stretch a bit further, that can stiffen prices where they've softened. The drag on values is uneven, but the causes rhyme. Think of this as a slow reconciliation. Pandemic-era aspirations meeting present-day restraint. In many, Metro's Northport, Bradenton, Sarasota, Naples, Marco Island, Sebastian Vero Beach, West Vero Corridor, Lakeland, Winter Haven, Port St. Lucie, the villages around Wildwood, Deltona, Daytona Beach, Ormond Beach, and Homosassa Springs, listings lingered and cuts piled on. Sellers who priced to 3 years ago comps met buyers armed with more options and more patience. Meanwhile, single-family homes in some pockets remain buoyed by relatively thin inventory, while condos feel the nudge of higher carrying costs. That median HOA fee shift from $125 to $135 matters when you're stacking dues, insurance, and assessments on top of a mortgage. Here's an instructive split inside one metro. In Vero Beach, the spread between a $4.65 million median inside St. John's Island Club and the wider market's $357,379 median list price shows a market playing by 2 sets of rules. At the top end, wealth consolidates. In the middle, affordability dictates. You can say something similar about Florida as a whole. A $9.8 million average in Palm Beach, up 1.5% in a year and 118.2% over 5, coexists with falling values in Cape Coral, Northport, and beyond. Even mid- and high-tier sellers in Naples and Bonita Beach have been trimming asks to meet the moment. In Collier County, a waterfront home at 700 Admiralty Parade West, listed at $26,950,000 and sold at $26,500,000 in just 35 days. Tight markets still clear fast, but they're not invincible. Affordability, ironically, is where the deepest declines are already doing work. Cape Coral and Northport recorded the nation's most significant improvements in price-to-income ratios. Put simply, local incomes can reach more house now than a year ago. That does not erase a 10.27% drop in prices in Cape Coral or an 8.84% slide in Northport. It does change the math for local buyers who were boxed out in 2022 and 2023. The stretch that seemed impossible then may be within reach in 2006. This is the paradox. The same Florida that handed homeowners median equity losses near $10,000 to $17,000 last year also delivered legacy sales that will be talked about for a decade. The same coastlines, where some estates have aged for more than 1,000 days on market, can still produce a $55 million closing in under 60 days. And the same state that crowned Palm Beach with a $9.8 million average home value saw tiny gains of $511 in Arcadia and $2,427 in Lake City. To understand where this goes next, follow the chain. Step 1. Inventory. 40% of listings sitting beyond 90 days in certain central Florida corridors is a sign that sellers need to meet the market. If those owners adjust, you get more closings like Collier County's Fort Charles Drive at $43,100,000 after just 46 days, or 700 Admiralty Parade West at $26,500,000 after 35. If they don't, you get more slow bleedbacks like Cutlass Lane in Port Royal dropping from $60 million to a $55 million sale, or Il Cuore Court in Lee County slipping from $17,995,000 to $13,250,000 after months on the shelf. Step 2. Carrying costs. HOA fees nudging up 8% year over year, from $125 to $135. Sounds small, but multiply across 12 months, add to insurance, and layer on assessments. And it erodes the buyer pool for condos and some townhomes. Sellers in those buildings see it first. Time on market stretches. Incentives arrive. Prices follow. Step 3. Demand. After rising through 2024, Orlando's median price flattened by December 2025 at just over $380,000. That plateau indicates buyers have leverage again. In coastal metros, agents are seeing January contract activity jump, more than double in one case versus the prior January, as pricing resets attract dormant buyers. In Northport and Cape Coral, the harsh declines have already started to rebalance the price-to-income equation, offering a first real shot in years for locals to buy without leaving town. Step 4. Wealth flight lines. Palm Beach remains a gravity well for capital. An average home value of $9.8 million, rising 1.5% in a year, and more than doubling, 118.2%, in 5 years, does not persist by accident. The market there is structurally tight, finite land, strict development barriers, and high replacement costs that make existing trophy assets harder to replicate. Appreciation is segmented. The best addresses have surged. Other categories have climbed more moderately. But the overarching dynamic is stickier than a typical boom-bust. At the very top in Naples, the data writes its own script. 6 of Collier County's top 10 sales in 2025 were brokered by a single firm, and the pipeline for the season ahead is being described as the strongest since 2200. The current highest price listing in the county, a waterfront property at 2014th Avenue South in Old Naples, asks $89 million. It spans nearly 3 acres across a full city block, with an older home from 1962 on site. Inventory is not just a number, it's a museum of options. If a legacy estate like Gordon Point, once listed at $295 million in 2020, and later adjusted to $210 million in 2025, returns to market, it will test just how deep the bidder bench really is. Lee County tells its own version. One spec home built without a buyer at 26,532 Hickory Boulevard landed a record $14.3 million sale in September, more than 5,300 square feet under air, 6 bedrooms, 8 bathrooms. Along that same strip, 4 other top 10 sales in 2025 stacked between $10.6 million and $9.7 million. Most sold below ask. None disappeared in a day. The most expensive active listing in Lee right now is a more than 11,000 square foot home on Sanibel Island, priced at $33,880,000. It's been looking for its next owner since June of 2024. Not every outcome hinges on owners and buyers meeting in the middle. Policy, too, can shift the edge. If lawmakers advance any of the property tax relief proposals under discussion, Floridians will have their say on the November ballot. For a buyer in Orlando, scraping for an extra bit of room, a lower annual bill could open another neighborhood or an additional bedroom. For a seller in Deltona or Lakeland, a marginal boost to buying power could stiffen a softening comp. For investors in condos from Miami to Daytona, the combination of rising HOA fees and any property tax reduction would pull in opposite directions. One more detail speaks to temperament in this market. Patience is back. Some of the most spectacular listings in Collier and Lee sat through hundreds of days before finding a clearing price. The three pieces of the $225 million Gordon Drive compound each logged 784 days on market. In the luxury ranks, that is not a panic sign. It's a process sign. Value is negotiated. A buyer is matched, sometimes after years. But patience can be expensive for the rest of the market. When 40% of listings in certain Central Florida metros are beyond 90 days, sellers are carrying extra mortgage payments, taxes, insurance, and repairs. In Deltona, Daytona Beach, Ormond Beach alone, those 210 long-listed homes with an average of 244 days on market are locked capital. Some owners will cancel and wait. Others will cut and sell. Across the state, activity picks up fast when numbers snap to reality, like the Naples address at 3035 Fort Charles Drive, closing at $43,100,000 in 46 days, or the Port Royal address at 700 Admiralty Parade West, closing at $26,500,000 in 35. For buyers, the best guide right now is sharp math. In Northport, an 8.824% dip paired with improved price-to-income ratios creates a more navigable entry ramp. In Cape Coral, a 10.27% drop and five-figure equity hits exceeding $38,000 reshape negotiations in real time. In Jacksonville, the gentler slide of $11,241 on average may hide more variation by neighborhood. In Vero, knowing that the metro's median list price sits at $357,379, while a high-walled club median reads $4.65 million recalibrates expectations. Palm Beach is its own weather system, with a $9.8 million average, 1.5% annual growth, and more than a doubling over 5 years. For sellers, realism is oxygen. In Punta Gorda, values down 7.97%, and a median drop of $26,624 leave little room for nostalgia. When profit margins for sales in that area fell from 88.3% to 58% in the third quarter of 2025, the scoreboard was announcing it plainly. Price for today's buyer. If you're in Naples or Bonita Beach at the top end, the comps show most winners are trimming $29.45 million, asking to $26.4 million closed on Gin Lane, $35.995 million to $34 million on Rum Row, $17.995 million to $13.25 million in Mediterra. If you're chasing 0 days on market at $35 million even, you are likely in a one of one. So what's next? Base case, the correction keeps grinding through 2000-2006. Not a crash, a recalibration. In the broad middle of the market, especially in metros that claimed 8 of the top 10 national percentage declines, prices and days on market will continue to test each other until sellers capitulate or buyers refill. In places like Orlando, where December 2005's median hovered just above $380,000 after a year of plateauing, the buyer's hand should remain stronger than it was in 2014, especially if property tax measures advance to the ballot and hint at future relief. In coastal pockets like Sarasota and Vero Beach, strategically priced listings will still draw multiple offers, as January contract activity demonstrated by more than doubling in one sample, while aspirational asks languish and cancel. 2 watch items could swing the tone. First, November. If any property tax relief proposal makes it to voters and passes, that change will ripple through budgets in 2000, but the expectation could nudge behavior before then. Even a modest annual saving could expand the pool of qualified buyers in mid-tier markets like Deltona, Daytona Beach, Ormond Beach, or Lakeland, Winter Haven, where listing timelines and price sensitivity are already high. Track legislative movement and the ballot language. The signal is binary, and the calendar is fixed. Second, the ultra-luxury inventory overhang. With more than 60 active listings at $15 million and up in Lee and Collier, and about 22 months of supply, any unexpected economic tremor could shift that segment from patient to pressured. Some of those estates have already sat for more than 1,000 days. If the bid thins, deeper price trims could cascade down to high-end adjacent tiers, pulling comps lower in Aquilane Shores, Old Naples, Port Royal, and Bonita Beach. Conversely, if a handful of marquee closings, think $89 million asks in Old Naples or a revived Gordon Point, clear at strong numbers, they can re-anchor expectations and absorb a chunk of the standing supply. Between those poles, opportunity hides in the details. In Northport and Cape Coral, the worst of the price damage may already be translating into local affordability gains, with meaningful improvements in price-to-income ratios recorded over the past year. For would-be buyers who couldn't write an offer in 2002, that's a different proposition in 2006. In small towns like Wauchula, Old Town, South Bay, and Bell, steady 1 to 3% annual growth layered on top of multi-year gains north of 48% suggests a quieter path to appreciation, average values around $290,000 or less, fewer headlines, more patience. Keep Florida's split screen in mind. In Palm Beach, an average of $9.8 million, up 1.5% this year and 118.2% over 5, speaks to permanence, scarcity, and the cost to replace what's already been built. In Cape Coral and Northport, 10 to 9% annual price declines and equity hits over $38,000 give back the frenzy and hand locals a new shot. In Naples, a family can buy a main house for $85 million and a guest house for $20 million and still get eclipsed days later by a $225 million combo up the road. The through line is simple. Florida is not one market. It is a set of markets, coastal and inland, luxury and entry-level, condo and single-family, correcting at different speeds for different reasons. The path forward will be written in listing adjustments, HOA dues, ballot language, and the occasional record-shattering closing on Gulf sand. If you want to see this level of clarity applied to your zip code next, tap subscribe.